Okay, guys, welcome to another episode of What You Know, No Good. This is an informational and educational video series about multifamily investing and wealth building. Today, we're going to talk about what is a value add apartment building. Who am I? I'm Keenan Starks. I'm a multifamily investment specialist and licensed real estate agent. I help people buy, sell, and invest into real estate every single day. I have tons of resources when it comes to wealth building and connections in the Twin Cities, the Minnesota area, and Southern Florida territories, where I also have market knowledge and investment opportunities available. But enough about me. What is a value add apartment building? A value add apartment building is a property that an investor purchases at a discount with plans to improve the property and increase the rents. The investor would then sell the property at a premium after holding the property for a period which is usually about 5 to 7 years. Value add properties are those that need a little bit of corrective action to reach their full potential value. These properties are riskier to the investor and offer better returns than standard or core properties. Properties in the value add usually have a list of repairs needed, including deferred maintenance. Below market occupancy, rent rates are usually below the norm, and the utilities may even be due for a complete upgrade. Things like electrical upgrades and HVAC repairs. But in order to generate a good return on their investment with a value add property, investors must put in that capital or the sweat equity, or sometimes even both. Common ways to improve value add properties include property renovations, both inside the property and outside the property, switching up management teams, decreasing the amount of energy the property uses, implementing marketing efforts to attract quality tenants, and also changing how the property generates income, such as Airbnb conversions, adding coin washer and dryers, or charging for storage units. Some call this repositioning the property, and the purpose of this is to change the value of the building by increasing revenues by making the capital improvements that are needed to make the building more attractive to quality tenants. Understanding the physical condition of a property is essential, but a background in construction and architecture is a definite plus. Market analysis is another crucial skill to have in your toolbox, as many factors relating to the property valuations are outside of your immediate control. Understanding property management and how to generate and maintain cash flow is also an incredibly important skill to have. Stay tuned for future videos, which we will cover management fundamentals and cash flow management. So you ask, what are the benefits of investing into value add apartment buildings? The primary benefit offered by value add real estate investments is the potential to boost the ROI, which is the return on your investment, compared to core or core plus properties. Savvy investors can find a diamond in the rough property throughout the city and invest some capital and some sweat equity and turn around and sell that property, or they can hold on to it for the improved cash flow that it generates after it's been stabilized. In my opinion, value add investing is an excellent way for individuals or a group of investors to leverage their professional experience and connections in the real estate world to generate higher returns than projects that may not have that value add element. Investors in value add projects also receive the benefits that come with all the commercial real estate purchases, including possible appreciation and stable long-term cash flow. But on the other end, value add investments do come with a higher risk profile than core and core plus properties. So what are the risks included with value add apartment investing? Well, here are a few. What sets the value add apartment from other real estate plays is the fact that it tends to focus on properties in need of improvement, and they utilize more leverage or more debt than the standard real estate investment. And they rely on construction and developing the projects to generate the returns. Construction risk increases significantly to the risk profile of value add investments. And that's typically because the more construction or the renovation the property needs, the higher the risk is. Smaller projects like increasing the size of a property or replacing fixtures and building systems or cosmetic upgrades carry lower risk than full overhauls or conversion projects, which change the use of the building. An example can be like turning a formal industrial space into loft housing. And this is the process known as adaptive reuse, and these kind of projects are a little bit more risky. And if you plan on replacing or increasing your tenant base, there's also risk involved with that as well. Actions like raising the rents or enrolling new tenants may prove to be a little bit more difficult than you initially believed, and that can lead to you going over your budget costs and declining cash flow. In addition, value add investments may be a little bit more dependent on the total returns instead of the shorter term yields, because price appreciation is often a huge factor when determining returns for value add projects. So to put it another way, on value add deals, there's a period of construction and improvement that is most likely corresponding to a period of declining rents while vacant units and spaces being renovated. So the time that the property isn't making money, investors project that into future calculations of returns. Value add investments are available to pretty much anyone, but it takes a particular type of investor to consistently win with the value add property investments. You probably don't want to start off your real estate career with a value add project, but while it's possible that you could come out on top on your first deal or even with a big profit, it is a chance that your project might go over budget or it might take longer to complete, and that can lead to underperformance. Remember that value add real estate investments come with more risk than the traditional core or core plus commercial real estate. Most value add projects range from a medium to high risk, so if that's above your level risk of tolerance, value add may not be for you. These projects are best left to those with experience in dealing with all the moving parts that come with value add real estate investing. Whether value add projects are right for you should be determined by your appetite of risk and your experience in commercial real estate. So what are some of the tax advantages of value add investing? Investing into value add real estate offers many tax benefits over other investment classes like stocks and mutual funds and bonds. To start with, the property's depreciation schedule allows investors to claim several tax deductions as long as they hold ownership or a share in the property. It allows investors to deduct 1/27 and a half from their taxes each year on property depreciation. In addition, property investors are entitled to deduct the cost of maintenance, day-to-day repairs, utilities, and other costs of running and maintaining an investment property. When engaging in new construction or renovations with borrowed funds, you can add the interest you or your company pays on the loan to the basis of the property and depreciate it over 27.5 years. Value add opportunities are also eligible to be added to a 1031 exchange to defer taxes on capital gains, which can allow you or an investor to reinvest their gains each year while not having to pay Uncle Sam until you withdraw completely from your investment. So that's pretty much value add in a nutshell. We've covered the definition of a value add, the purpose of a value add, what separates value add from other investments, what are the risks and advantages of a value add, and we even dabbled into some of the tax advantages. I hope this video has helped you out. If you or somebody you know that's looking to buy, sell, or invest into multifamily housing, please pass along my information and let them know that you do know a multifamily housing specialist. Thanks for watching.